Okay, let's look at cryogenics. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So, cryogenics, it's a very interesting theme. There is certainly some overlap between it and some other themes, but there's enough, distinct about these companies that make them really like cryogenics. So 141% here from the low, minus 20% away from the 52-week highs. So we do have a mix of companies here. So we will look at American Cryostem. 114% here from the low, but we have a massive haircut, minus 74% pullback. That is certainly a big haircut. So stem cell technology, discover the possible of cell-based regenerative medicine. A stem cell platform designed for everyone. It all begins with a sample, fat tissue collection to extract each client's own genetic material. One simple, quick collection starts the future of a personalized regenerative medicine program tailored to each client. So this is definitively, the future. It was, science fiction not that far back, but it is becoming science fact. Stem cell technology allows you to use your own stem cells to restore your appearance and more. There's nothing more personalized than you. So here, tissue collection, tissue processing, tissue storage, stem cell processing, stem cell cryopreservation, and then stem cell therapy. And here is like one example, cosmetic tissue transfer. So this is, it's still at a very early stage, though the future is really spectacular. We can have, cases in the future where someone is in a horrible accident, losing a lot of skin, really graphic stuff, but through using, regenerative medicine, you can just literally regrow their skin, and it would change a lot. I'm pretty sure you have seen firemen who've been in been really damaged and have a lot of skin distortions. That could be fixed with this kind of medicine. And that's just one example. I mean, the potential is huge, and it will be quite revolutionary. This stock, it is over the counter. So we have way less data on this company. That is a bit of a double-edged sword. On the one hand, it means that a lot of stuff isn't efficiently priced here into the chart. That can create some very interesting alpha opportunities. The other thing is that it is more difficult to really know what is the fair price of this company. And if you were to hire, various analysts to really deep dive into the financials, they would have more different projections, because there is a reality, that when you have price targets for, as an example, Disney, the analysts, they sort of come to agree, so they sort of borrow ideas from each other, and we see the same thing with movie reviews, where the reviews are very similar. They sort of hover around the same score. But when you look at movie reviews for movies that are more esoteric, that doesn't have that many who analyze and review the movie, then you see that the scores vary substantially. But basically, this can create some alpha opportunities, especially during these kinds of technical situations, because as you can see with the current price, we are at a price level that has been very interesting for bullish opportunities in the past. So let's just use this here as an example. So here, this is the current price of the stock, like that. So it could, if we go down to the low, it could go down minus 81%. Okay, obviously that is a lot. And that's the bad news. And that, of course, if you don't use a stop. Ideally, you do want to use some stop. But, it could also go up hundreds of percent. Only to go up here, the previous high here, that is approaching 300%. This high here, that was 330-ish%. Even up to this high here, that would be 42%. So this is interesting. it's with these kinds of stocks where you can get a pretty sizable move, obviously in both directions. I would lean bullish here, but obviously this is speculative. And when you look here at the long-term correlation with the S&P 500, there's almost no correlation at all. And that is also one of the benefits of these over-the-counter stocks, is that they do not have the liquidity for mutual funds and ETFs to really get into them, which also means that you have a different set of players trading these stocks. So if there is like a major sell-off in the market, then the mutual funds and the hedge funds, I mean, they just aren't going to have that much exposure to these kinds of stocks, if anything. I mean, frankly, due to the low price of these stocks, many are actually, they are bought for buying like stocks like below $5 and stuff like that. So yeah, it is interesting. If you look here at the technical formation in development, we do have one of the the key reversal patterns. You could argue we do have an inverse head and shoulders pattern that is bullish. You could also argue that we do have a bit of a cup and handle. The handle is a bit deep, I must say. I would ideally want to see the handle a bit higher, but some cups are shaped a bit differently. So basically, we do not want the bulls to goof around anymore. I mean, they need to start buying, soon. To prevent, you definitively do not want to have any kind of break below these levels here, because we are at horizontal support that should hold if there are bulls out there. Here are the daily data points. Now we are below. I think, yeah, it is all moving averages. That is not bullish. It just isn't. But the context does matter. The context is that we do have, very long-term horizontal support. We just do. So I would lean speculatively bullish here, but I would be very clear, this is definitively speculative. I went to Sachs and Finviz to scour for some data on this company, but unfortunately I did not find much about them. It is, simply, this is, it's not big enough. So, yeah, so definitively, to be perfectly clear, there is a lot of risk when it comes to these kinds of stocks. But then again, if you do want those big moves, you need to have some spice in your portfolio. This is definitively the jalapenos of a portfolio. As we saw, it could move down very big. I certainly would like to have a stop when putting on positions for these kinds of stocks. But due to the liquidity issues, you have to be a bit careful about where you place your stops as well. These are you definitively do not want to use market orders either when buying or selling these kinds of stocks. You do want to have a limit order. You want to be very strict and be also patient, because especially if you are swing trading or a bit more longer term, which are my preferred strategies, then you can be a bit ambitious when you put out. Let's say you want to exit a position, you can be a bit ambitious initially, and if you don't have any takers, then you can start to reduce it. But yeah, you should do that. And frankly, due to the fact that some people do not understand market orders, you can also be a bit lucky in the sense that you put in some limit sell order, and then you have some person that just throws some market order out there, and you end up being filled. So I've experienced times where I get filled at some amazing price, and that is not because I was being a genius. It's because someone else in the market was being the very opposite. So yeah, very interesting opportunity, but definitively very, very, very spicy.